All right, so in today's episode, we are going to take a look at Skillz. This company just reported earnings, and both bears and bulls are out full swinging right now. It's pretty intense. So in today's episode, what I want to do is take a look at both the bearish and the bullish side of things and try to see who I believe is right, or is there even a scenario where they both could be right. So stay tuned to find out. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up, and stay tuned where I live stream here on YouTube, taking a look at stocks you want me to look at. So let's get started. All right, so first let's start off by taking a look at stock price action. Right now, Skillz is traded under the New York Stock Exchange as ticker SKLZ. The stock is sitting at $16.41 as I am recording this video, and it is down 3% after reporting earnings. At one point, I do believe it was down more than 5%. If we take a look at the 52-week high, the stock has seen a crazy pull down over 60% from there, and is currently sitting at a market cap of near $6.5 billion. All right, so first let's take a look at the first bear point, and that's gonna be that the explosion of loss that this company saw this quarter. And I wanna say, bears do have a point here. For example, for 2021, the company saw loss of operations of about $51 million, where compared to same time last year, loss from operations was $15 million. It more than 3x. A huge reason was just overall total cost expenses have increased dramatically, mainly coming from the sales and marketing side. So bears are saying, hey, you guys are spending too much money right now, and and not growing fast enough. But then bulls can come out to play here, right? Yeah, they're saying, okay, bears, we give you that. You guys take that huge net loss, right? We definitely got that. But we also achieved some great things. We achieved an increase of 92% year-over-year revenue growth. We also achieved 95% growth on gross profits. And we also saw gross marketplace volume increase 85% compared to same time last year. So even though we are seeing huge losses, the company is still expanding. And this is the great thing about investment, right? Both sides of the story could be right. It's just how long can they be right for? And that's something I'm gonna explain a little bit later on in this episode. But let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. All right, so the second point we are going to take a look at is the CFO stepping down. Right, so the CFO has recently stepped down, and it kind of happened near the time when a short report came out for Skillz on how they were kind of like fudging numbers and how they were kind of lying to overall investors so about their revenue. Right, so it kind of definitely fueled the fire for Skillz. And to be honest, I can't answer for that guy. Why did he leave? We can only speculate the reason for the person leaving. But on the bullish side, right, Skillz just recently hired Airbnb executive Ian Lee as the CFO. Lee was the head of Investors Relations during Airbnb's successful IPO and brings deep public market expertise to the top mobile gaming platform. And right now, right, I wouldn't say how the CFO leaving was a bearish case. I don't see a CFO entering being a bullish case either, right? The CFO might not really know what's happening right now. I do think what really would make the difference is if in a few months, if the CFO does end up leaving, that to me would really raise a red flag. All right, so the next point we're going to take a look from the bears is that during the press release for Skillz, in their financial highlights, they made it seem like they were profitable in adjusted EBITDA. It showed adjusted EBITDA was $31 million compared to $14.6 million. If we take a closer look down to the company's actual numbers, the adjusted EBITDAs actually represented a loss. So again, bears are saying, hey, you guys are just really not caring and kind of giving us fake numbers right now. There was a correction that took in place today, and they actually made that correction that they show a loss now. So was this just a mishap? Were they trying to trick investors? At the end of the day, I don't think so, right? I mean, they had the actual number in the bottom. I don't think they were trying to show a positive to see the stock price go up for a few seconds, sell everything off, and then overall, because at the end of the day, investors would have just continued to scroll down and saw that, hey, yes, it's actually a loss right now. So they corrected it in less than, I want to say 24 hours. So again, not a bearish case, not a bullish case. But I think something like that, mistakes happen over time. I think it would have been very, very sketchy if the mistake was happening both in the top and right here when they were showing the numbers in this graph right here. But here they weren't. All right, so the next bearish point I am hearing about is how there hasn't been much growth in monthly active users for this company. For example, for 2020, they had about 2.6 million, and now they have 2.7 million. Very, very small growth year to year. And another thing I am hearing from bearish sides is that, hey, this monthly active users, why are you not sharing it over the highlights, right? This is something you should share under the highlights section because monthly active users is important for your type of business. And bears, yes, that is right. There has been kind of a slowdown in that growth. Thanks for telling us that. And good to keep in mind of, right? That's something every investor should definitely listen to. Management has stated that though, that even though there is a slowdown in monthly active users, what they're really concerned about is paying monthly active users. This describes a more important metric of their business. And not only are they seeing an increase of paying monthly active users compared to same time last year, right? Last year they had about 258,000, where now they have about 467,000 of paying monthly active users. The actual conversion rate is increasing as well. Conversion rate is now 17%, where same time last year it was 10%. So in theory, even if this company has a slowdown in monthly active users and can continue to increase its conversion rate from 17% to even a higher number, this company can continue to increase its revenue. What they would really have to see a decline in monthly active users, in my opinion, for it to really affect the company. In the perfect scenario, right? I think in the perfect scenario, you would want to see an increase in monthly active users and an increase in the paying conversion ratio. But I could see in the future both cases, right? If monthly active users start trending downwards and maybe conversion rate starts trending downward as well, that's going to be a huge red flag. So right now we're kind of getting to like a yellow flag in monthly active users. And we have a green flag from that conversion rate. The other thing that it was saying, bears were saying, hey, why don't you share your monthly active users in your highlights? That's kind of sketchy practices. I don't think that's sketchy practices, right? The highlights are pretty much sharing the good things about the company. I'm pretty sure a lot of companies have recently done their earnings, and you don't see them saying that, hey, on their highlights, oh, we've seen a slowdown in American-based subscriber counts. We've seen a slowdown in blah, blah, blah. They don't mention that in the highlights. They usually just mention it somewhere in the bottom. So I don't think that's sketchy practice. I feel bears that kind of pick at stuff like that, that's just trying to find a bear thing. That's just trying to find a bear thesis under every rock, right? So I think it's understandable to see both sides, but not try to nit and pick everything you can see. All right, so now that I've talked a lot about the bear points, I just want to share some bullish points. So the first thing, the company has a balance sheet of $613 million and no debt to their name. So that's pretty great news. The second thing, financial outlook, the company increased their 2021 revenue guidance to $375 million, which equates to about 63% year-over-year revenue growth, where I believe last quarter it was closer to 58% year-over-year revenue growth in the prior guidance that they gave. So you saw a nice increase in there. Some other things, they are expanding into the Android footprint, and growing revenue from Android users is 2 times faster than iOS right now. Next, I also want to show that, hey, not only are they increasing their paying monthly active users, but they're also increasing their average revenue per user, where same time last year was about $5.57. Now it's $10.35. The company is continuing to increase their overall executive team. They've added a chief marketing officer recently. They've also added some other key positions such as head of consumer marketing and head of communications. It seems like they're really gonna try to tighten out this overall sales and marketing expenses, and I do believe this is gonna be the best way around it by hiring some leaderships that are really strong in this sector and are gonna be able to track down, hey, maybe we should stop doing this type of marketing, maybe we should stop doing this type of promotions. So I want to see how this team is gonna move forward to kind of reduce the overall cost expenses that this company is seeing. There are some more bullish points for Skillz, right? They are opening their synchronous technology to a handful of developers. This technology is a key building block that would enable platforms to support real-time gameplay. For example, racing games, fighting games, and shooting games. So they're kind of overall innovating in this technology so soon they can start hitting those markets, which I think is pretty impressive. Ultimately, they want to be able to support real-time multiplayer content games such as battle royales, and I think this is the real future for Skillz. The final bullish case, in my opinion, for Skillz is this international expansion. They're trying, by the end of the year, they're still on track to expand into India. And this is gonna open up such a huge marketplace for the company, so we can see continuing development in technology and expansion into different markets. So now let me share my overall thoughts on Skillz. First, I wanna say Skillz, I do think both bears and bulls can be right here. I think bears are probably right in the short term of things. I think this is a stock that's going to be very volatile, and most volatility is going to be on the red side in the short term of things. But I think if you are a bull in this company for the long term of things, right now this is more of a growth stock where maybe certain metrics right now might not be screaming buy right now, but if they expand into new games, if that technology improves and they're able to enter into racing, into RPG, into multiplayer, into shooting type games, then there can be a huge potential growth for this company, expanding them into other regions as well. So this is, I want to say, more of a speculative growth play where there is huge potential. There's huge upside for sure, but at the same time, that potential comes with risk. And some of those risks are the points the bears made recently. They are seeing an explosion in expenses. They're also seeing kind of a slowdown in monthly active users. So again, both are right in the points they share, but I think right now in risk to reward levels, I do think the bulls might have a little bit ahead when taking a look at the longer term of things. So I hope you guys enjoyed today's episode. Like always, make sure to subscribe, make sure to hit the thumbs up. Take care and have a good night.